You're right. I suck. I suck at trading. I am horrible at trading, actually. I suck at trading so much that I want to quit every day. You suck. You're not good. You're not good enough. Where are your profits? Show me how much money you made. Oh, how much money have you made? How much money have you lost? There's way more questions that I get asked every single day about this topic. And while I answer them in clear honesty, sometimes joking, deep down it hurts. Because deep down, I've been doing this for more than 2 years now. I've been really at it for more than a year now. And I've only started to really understand it for less than a month. So the real question is, how long will it take? How long will it take for me to become profitable? Because today, I could have had a perfect trade as I saw the trade happen live. I saw the PD arrays being created live and being respected live. And I saw my trade go negative and being taken out live. Why? Well, the first reason is because I was in school. See, this is a huge topic for me because being in school means that you have to be locked in academically. You can't be on your computer 24/7. You can't be on your phone 24/7. You can't be not doing schoolwork 24/7. You can't be not listening to the teacher or your fucking advisor 24/7. You have to pay attention to the charts and the teacher and have to do work at the same time. So for me, the only analysis that really goes in is after this video, tomorrow morning, if I have time, and that's it. And then maybe during the day after those initial trades have been taken. That's it. Do I wish I had more time in front of the charts? Yes. Can I make that happen? Probably, yes. But it will cut me off from a lot of things. I already do a lot of studying during the weekends. I look at the charts every weekend. That's a huge sacrifice from what I could be doing. I will admit that I've seen progress and that it's good. But I will tell you right now that, as you guys have seen, I've been trading paper money, which is fake money, which is practice. In my mind, in other people's eyes, it's practice. It's all practice. It's practice for the real money. What does that mean, though? Because you might have 30 grand in your practice account, but you might only have $100 in your real account. So the risk to reward is different. And the biggest thing is, do you actually care about that money? That's the problem. And for me, I do. And so it's very hard for me to trade real money because I am emotionally attached to that money. The thought that goes behind every trade is, I want to be profitable off this trade. I want this trade to turn my life around, or I want this trade to be plus 50% or plus 60%. I want this trade to be one of the best trades. I want this trade to turn my account around. But that's the wrong mindset because I care too much about that money. Because the moment it turns negative, that's when all hell breaks loose in my mind. Everything. Oh God, what have I done wrong? What is the trade doing? Should I look at the bigger picture? I become so isolated in the 5-minute to 15-minute time frame that I forget to look at the bigger time frames when taking my trade. I become so isolated in my world when trading that I forget about news, that I forget about the quarterly theory. I forget about the manipulation. I forget about the liquidity. I even forget all the levels that I've drawn out, and I just forget that they're there. And I just hope that my short position or my long position goes to the moon or goes to the ground. And that is what is ruining my trading career. That right there. Not being able to contain my emotions and not being able to be disciplined enough to control my trade and the live execution. That word right there, live execution. You don't experience that until you put a lot of money into the stock market and lose in a matter of seconds. Live execution is like a nightmare for me. Was it a nightmare today? No. Why? Because I did my analysis. And let's go and talk about that now. So, I don't know if you guys remember yesterday. But yesterday we predicted that price would come down into this red zone, which, as you can see, did not happen whatsoever. If we look at the daily, just quickly, we can see that price, this is the candle right here that I'm talking about, Monday. I did say that for the week, we would be targeting this low or go higher. And I was waiting on CPI. Okay. I also told you guys in my last video, if you guys really paid attention, that I wouldn't trade tomorrow. I wouldn't trade today. And I ended up taking a trade today, which if I entered at the right time would have been a win. But I entered the wrong time, understood my mistake, and got out before it even hit my stop loss because I knew I made a huge mistake and I had to get out of my position. And it was a trade that, it happened after a big move. So you'd hope for a second big move, but unfortunately it hit that PD array and started consolidating. And after I saw that consolidation, I knew that we were going to reverse trends or consolidate for a while. So I did not want to be in that. So I just got out. And I could have lost more than my whole account in that trade. So there's a good side and a bad side. But anyways, we're looking at this daily fair value gap here in the gray, which we've been trading in for a while. And we were also looking at this imbalance here that happened on the 4-hour, I believe. We also had this bigger daily imbalance here that we haven't traded in or didn't want to trade in. So we kind of just stayed above for pre-market as this was a 4-hour fair value gap. This was Friday, Sunday, and then Monday opens right around here. So this is when Monday hits. And as you can see, we don't even trade into this fair value gap at all. So that gives me a good idea of like, okay, well, what are we going to do? What is price wanting to do? Do we want to trade all the way down into it, trade under this, trade all the way down? But then I remembered, right, we have CPI and core CPI and core PPI all come out basically tomorrow and after tomorrow. So that right there is very high impact, high volatility news events. So the stock before that day, not many people trade it. The stock itself is not very volatile, and it doesn't want to really go anywhere. As you can see on the daily, this is a form of consolidation. We did not really expand anywhere. We just kind of took out levels and kind of just stayed in the same opening price range. So, because it doesn't want to make a huge trend and have to buy it all back and make displacement, right? So, what we notice, right? Obviously, it doesn't want to really trade in that daily imbalance. As you can see, the last time we touched it was Friday, and then It came all the way up here to this 4-hour imbalance. As you can see, Monday we open here at 12 a.m. Kind of trades up. No kind of reversal. I didn't really see any PD arrays here except from like an order block right here. That's really the only PD array I can really see right here. But there's no. I guess there could be like a 1 minute fair value gap here that of this wick. But again, this is pre-market, so I don't expect it to respect any fair value gaps or order blocks or stuff like that very heavily. But ends up reversing into our quarterly theory. And if you guys remember, right, if we draw the quarterly theory, we have XDMA and AMDX. So this would be a reversal of trend. So this would be XDMA and not AMD. Because if we look at our notes real quick, which I have set up right here, we can see that the X is either continuation or a reversal of the previous quarter, which is here, the end of the Asian quarter and start of the London quarter. And if this was AMD like this, the gray one would be accumulation. The problem with this is when you open your chart, I immediately knew that this was going to be a XDMA setup because of this reversal. Did it accumulate price at all? No. What it did is I can see just this. It's like almost like a swing. It just reversed out of nowhere. Just kind of reversed, right? Down, up. Now, did it come out and take all this high? Yeah, but right here in this part, right, when you draw this out in the zone currently and you draw all to the 4 sectors like this, you can see that this is just a clear reversal. So then obviously what happens after a continuation or a reversal of the previous quarter, then we have accumulation. And so this is the part that where New York opens, I don't really like this. I don't really like XAMD because it's kind of the opposite of what I do. And I don't like how the manipulation is after the distribution. Usually manipulation happens before distribution. And that's what AMDX makes sense. And that's the only one I really quote unquote trade, because this to me didn't really make sense. Although it did kind of make sense, because when I saw this, I'm like, okay, well, it came up and then we hit 6 a.m., which is now New York session. We open New York session and then it starts going down. You can look at the 30-minute. And so around 8, stuff like that, I get on the charts and I start marking up my true opens, my London lows, and my long-term liquidity down here that is under London lows. And so if you've been trading ICT in the quarterly theory, you know that the price itself can't go up unless it comes under the New York true open, which is right here. So buyers will not buy if it's above. Buyers will only buy if it's under the New York true open for New York. And then also London lows are down here. So that's also a huge target for liquidity if price does want to come down. And we also have some low-hanging fruit here, sell-side liquidity down here, which would be the draw for if you were to go long. And right under that, guess what? We have that 4-hour imbalance fair value gap that was right there that could have been targeted here. So that long draw, that liquidity down here is definitely a target if you want to take a trade. And that was the idea, right? And I was very uncertain because we were in this distribution zone, right? And as you can see, is this really like in this green zone? Is this really distribution? This looks like manipulation, to be honest, right? Because we went lower and then we went higher and then we should possibly distribute. But no, this is now considered manipulation for some reason. I don't like to trade this at all. I mean, this is, it doesn't make sense to me at all. Although if you look in the higher quarters, right, this would be, actually you could look at it like this. If you just drew your things like this. So we know we're in the distribution part, but now if we do this, what is this? This is accumulation. So this is an AMD setup. So now that's what you could trade now. So you could do accumulation, manipulation above these highs, and then distribution, which starts early because you have manipulation early too. And then we had news at 8:30. Or we had no news, my bad, it's just high reaction. Distribution kind of starts, and then we have redistribution, which I took a trade off of. And notice how this 30-minute candle is just one big candle like this. Unfortunately, my trade, I entered like under these London lows. So all I really got was this part down, and then it got bought back up. And I'll explain that later on in the video. But you can see how the trade was set up. But this is what I would like to see, right? Accumulation, manipulation above this highs, which I know, or it could be the lows. And then we have distribution, and then you either have in blue, which is the X, would be a continuation of the trend or a reversal. And does this look familiar? Because it does to me. This is what happened on Friday, right? Manipulated above, distributed down, and then reversal. And this was, wait, no, this was, whoa, I'm tripping. Hold on. Wait, no, this was it, right? I'm not tripping. Yeah, this was it. That's right. Look at this right here. See this? This looks exactly like this. Does it not? Almost exactly the same. Leg down, huge leg up to take out those highs. So that just shows more bullish price action for tomorrow. But let's delete this. Let's hop into the 5-minute where I actually took my trade and where I was watching the charts live. Okay. So I have the quarterly theory just set up here so you can see accumulation, manipulation, started distribution a little earlier, and then reversal of trend. Okay, we have all these levels, which I think are marked out perfectly equal and are nicely marked out. So here we have 8:30, and at 8:30 around so we take out these highs, which I will mark out right here. Okay, and so these highs get taken out, and so that creates liquidity up here for buy side. Buy side gets taken out, and then targets these lows get taken out, and then we just kind of keep going. And then this is where I'm noticing that market is about to open, and I'm pretty sure I'm in the middle of history class when I saw this, and I realized like, oh shoot, like this is right out of manipulation. We're about to distribute. But like any good old retail trader, what are they going to do? They're going to short right away when market opens because they think this is the trend, right? We've been bearish this whole time. Like this is definitely the trend, right? We're bearish. When market opens, which is 9:30 right here, we're going to go ahead and short this shit and we're going to make money. While that is right, you should know that market likes to do these things. And I watched this happen live, and I was so happy that I caught that perfectly live. So on the 15-minute, we create a BISI or a SIBI. So sell side imbalance, buy side inefficiency. I'll repeat that one more time. Sell side imbalance, buy side inefficiency. Forgot what I said. It's a SIBI. Basically a bearish fair value gap. Okay. And I drew this in pink or pink reddish. I don't really know what pink just looks red. I don't know why. Like pink. There you go. I drew this in pink because there's this teaching with ICT that I haven't learned, but it's called the unicorn candle. And this is like a perfect example of it. 5-minute might be even better. But if you watch this live, this would have been just amazing to see. And I was hoping to get in this trade. Like I know I shouldn't trade before 9:30 or in 9:30. I should trade and wait until 10 because if I waited until 10, which was right here, I could have seen this move happen. I could have seen these lows get taken out, and I could have looked for some kind of market structure shift to target these highs, if not higher. So I could have went long instead of short here, and I didn't. So that was my mistake. But this unicorn is basically when market opened, it just started pumping. And to me, this was expected. I was expecting this candle. I was nowhere near stress. I was not I did not have anxiety. I was watching this candle being built, and I knew exactly what it was going to do right next. The only thing I did not predict is how far it would go. Okay, so you have this daily imbalance that we're trading in, and it actually barely tapped into that. I thought that price would go at least to the consequent encroachment and trade to there. Unfortunately, that's not what price did at all. What price ended up doing is it actually just, it just kind of almost tapped into it, and buyers, as you can see on the 1 minute, I'm pretty sure that shows, don't want to do that. Oh yeah, 1 minute, there it is. I was also watching this on the 1 minute when I saw this, and when I saw this, I was like, yep, okay, we're just, it's going down. So we trade all the, 930, boom, raises up. Next candle, what does it do? It closes under, like a hard stop, no wicks. There's absolutely no wicks. Straight down. And it gets bought back up. So you're like, okay, maybe there's one more chance for buyers to really push it up to the consequent encroachment. And that's where I made my mistake. Because the next candle opened bearish, it just started trading all the way down, bought back up. And that's where I could have bought. Because it theoretically broke structure here without closing, but when you see these kind of moves, you know it's going down. Unfortunately, I did not do that. I waited, and I waited so long that this candle, I just watched it live. It just came down. And then it came down, and when I saw this body like get down past these London lows, I knew that I was too late. I was too late to get in. I told myself I was too late to get in this fucking market. Why? Because look at this range. From here, let's go like from here to here. That's the range I had. Because remember, look at these long, like this is where, that's where our target would be. Like if I entered up here, that's our target. And if I did that correctly, if I entered off like down here and I targeted down here, and my stop loss is like above these highs or consequent encroachment, right? I would have had a nice trade. Like this would have been a nice trade right off the bat. Like I wouldn't have complained off this. Just 1 to 2, 3 candles. Done. You know what I did instead? I was so excited to get in the market and make some money because I got the move right that I entered off this candle right here. The candle right after. Okay, my stop loss doesn't even matter here because I just let it run through my shit. And my take profit at that time, I thought this was going to go all the way down to the consequent encroachment. I, believe it or not, thought this was going to sell off like a motherfucker. That's what I thought. And like I said, when I was trading real money with that position, I was blinded by the fact that we had just swept or were consolidating right before the low long draw. We were consolidating this whole time. We finally got under it and we started buying. And this is when we hit 10. So imagine if I got in the charts at 10. I would have seen this. I would have seen this sweep literally 5 minutes before I got in the charts or started trading, like officially charting. 5 minutes, boom, sweep. Then what I could have done. Okay, well, we can look for a market structure shift. So what does that mean? I need a swing high, right? And then I need a swing low. And that swing low needs to take out that swing high, right? It needs to also break structure. So this theoretically right here could be our market structure shift, right? Market structure shift here, okay? And then what are we in? Now we've just entered, let's see, accumulation, manipulation, and now we're distribution, and we're entering our reversal zone. Right? This is about to enter the reversal. We're right off distribution. Distribution is about to end here, and we're about to start reversal or continuation. So market structure shift. Obviously, this was a little choppy price action, so it might be hard to find a fair value gap being live because it's all choppy. So honestly, I don't blame you. I wouldn't have taken a trade here because obviously I'm not seeing anything here, and I hate trading on the 1 minute because it's just so volatile and there's just absolutely nothing you can do. So you can see even on the 1 minute, there's no entry here. I don't see a clear deliberate entry for anything because there's no fair value gaps that are being respected. Absolutely zero. There's no big displacement happening. It's displacement, retracement, displacement, retracement, displacement, retracement, and then a big displacement. So if you Indeed, just catch this. So let's say it's just like this is your move right here, and you caught this, for example. What fair value gap was created there or before that this candle created right here? Let's look on the 3 minute. Is there anything? 3 minute has nothing because this candle takes it out. So there's no fair value gaps here. Maybe I did see a wick though. That could potentially be somewhat of help. No, even on the 1 minute, that wick right here doesn't help at all. So yeah, there's just no entry for reaccumulation. But you could have just been a pretty bastard and just long and have your stop loss pretty risky and pretty stop. Now, where would your target be, right? If you're reversing, you have this engineered liquidity that is here and here, right? Those are the engineered liquidity, so that would be your 2 take profits if you're there. Obviously, fill this 30-minute gap, so that could be another spot of liquidity, but this also works. Now, would I target the top of this gap? Like, how many contracts should I go in for? That's a good question. Personally, I only go with 1 to 2 as of right now, but if I had more contracts, I would 100% leave a runner because of this bullish market. Although, like I said, I wouldn't quite trade today because of the accumulation that CPI could have tomorrow, right? So there's a lot of, yes, it's volatile right now on the 1 minute. Maybe it's even more volatile on lower time frames, but if you look at the really big picture, even on the daily, yes, we were volatile, but were we really? Like, this was just a drop and then a buyback, and we just closed a little bit. Like, we even traded above, and we might just see tomorrow this might be our last bullish candle for the whole week. We might just see a huge drop in price this whole week because of CPI. We could take all of this out because of CPI. And if we don't, then we'll see bullish price action to the moon, I guess. To the moon. So I think that's it for today. I mean, there's nothing really I want to cover on ES. Nothing that I've noticed. Nothing really on NQ. I mean, the only thing is the OT hasn't gotten hit yet. Didn't really draw to anything. Yeah, like even on NQ, you can see this candle is just fucking shit. No, nothing happened. So, yeah. I'll see you guys in the next video.